You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
We are for junior mining shares, this is the time of a lifetime, as far as I'm concerned. I waited 20 years for this market. We had a depression. All the weak sisters are out of the business. They couldn't make it. So the market, and they weren't bailed out. The market they just died. So the government didn't help them out. So the strong sisters are left. So it's an opportunity here.
This is Bill Powers, and it's Mining Stock Education. While I've been doing a couple conferences this week, was in Las Vegas earlier in the week. I'm recording this on Saturday, and it's the morning of the Strategic Investment Insights Conference in Chicago. This is a rebrand of the previous Chicago Resource Investment Conference, and I'm speaking with the co-chair and founder of this conference, Rich Radez. Rich, thanks for joining me today.
Very glad to be here.
So you love junior mining stocks. You have a background as a broker, and tell us a little bit about that and how did you get into junior mining stocks and why do you still like them?
Well, my brother and I used to own a coin shop, and back then only coins you could buy were Krugerrands and Austrian Coronas. So, and then I got in the brokerage business. I started working with them, and the first stock we were already sort of geared into the gold market. So the first stock I ever bought was a South African stock called Consolidated Fontaine. It went from about 18 cents to $24. And I bought a lot of shares, for new clients. So, most brokers hardly ever make their clients any money. But after you do that with some you guys, you're their broker for life. You know what I mean? And these people, they had interest in the overall world situation. You got to deal with people that understand really what's going on out in the real world, and people don't know what's going on in the real world. It's an opportunity for junior mining shares. This is the time of a lifetime, as far as I'm concerned. I waited 20 years for this market. We had a depression. All the weak sisters are out of the business. They couldn't make it. So the market, and they weren't bailed out. The market they just died. So the government didn't help them out. So the strong sisters are left. So it's an opportunity here. Like when I got into business, there were like 100 South African mines. There's only about 8 now. The mine that I got into, Consolidated Mine, and Eric and I it's on our website. We went to South Africa and went underground, and it's closed. When you shut down a deep shaft of mine, you can never reopen it again. There's rock burst. It's unbelievable. So all those mines in South Africa that they opened years ago, they'll never be reopened again. That's why I'm so bullish, really long term on, now it takes 15 years to open a mine. I mean, nobody's talking about that, but it's just going to create a lot higher prices. And no matter what happens here, no matter what the Fed says, they can't stop this inflation thing.
Rich, did you make your clients more money overall than lose money in the junior mining stocks? Because as you know, a lot of these little ones can blow up also.
Yes, I did overall, but we were diversified, and we have some not make it. It's true, but I believe in long-term investing, and believe it or not, my biggest problem was maybe I didn't sell like I should. You should have a criteria, once you get double or triple, you got to at least get out of half the stock. I learned that lesson, to do that and let the position ride, because markets change, companies change or whatever. But now is the time, though, to look at accumulate these kind of stocks, because we're right back there again, absolutely in the marketplace.
Yesterday at the conference, you had one of the attendees, George, stand up and share about buying a stock at 12 cents and now it's $4, buying a stock at 20 cents and now it's $3. So he's sitting on 30, 40 baggers. And I talked to George after the panel last night, and he learned about those at your conference years ago, and he's been holding them for years. And I know he's on 30, 40 baggers, but at what point do you sell?
That's a good question. You can't get married to any stock. I don't care what your position is, and I told George so many stocks have backed off. And he called me. I said, take some profit. And of course, he didn't listen to me. But anyway, that's, because you can't get married to him. But he is what this show's all about. Come in here, listen, because we expose the people here, the companies that they would never, ever see. and never, probably never would invest in. But, you could come in here. Most of the time you could talk to, the president one-on-one, or if you're not here, you can call them direct. You can't call the president of GM and talk to him. It's a big plus. But you can see these companies, and you can get a little good at it after a while because, they got to have a management team. They got to have a project. They got to have the ability to raise money, which is the big thing now, because that's why I'm so bullish. The money has opened up for these guys, and they're starting to finance now. And there's some companies that aren't here. You know why they're not here? They're so damn busy, they can't be here. And I haven't seen that in 25 years. They can't. There are things happening out there, guys, for real. The money's starting to flow in, and these stocks are just dirt, cheap and undervalued.
So you like gold, you made your clients money in gold, but when you look at where you were successful in the junior mining stocks, what commodity was it with? Was it with gold or other commodities?
We had other commodities too. And some of our biggest winners have been lithium companies, and it's worked out real well. Other type of companies, and there's a vast, and there are a lot of different companies here. Sometimes don't get just married to the gold market, which I am. I'm a gold bug, and I'll die a gold bug, and I'm sorry. I can't. I'm always bullish on gold, so I won't change. So I can't change my feelings or the way I feel. But the comments here, there were some people here and everything that's discussed here is on our website. So you can look at the panel discussions last night. You'll be able to see our panel discussion tonight. We have, I think, the best group of companies assembled here that we ever had before. Also, and you're one of them, some of the best panel speakers we ever had here. We've been able to attract major people, experts in the business, and and that's what this is an educational show. It's a workshop. You get a lesson. It's sort of like a gold 101, and you learn. And these people here are serious investors. They really are. Like gentlemen you talk to, there's tons of guys out there that have done that.
So you were a broker focusing on commodities and gold when many brokers would not be focused on that. They're focused on bonds or general equities. Just based on the vibe that you get with talking to brokers nowadays, are they waking up to the need to have commodity and mining exposure?
No, not at all. No, in fact, it's even worse than ever before because there's been a lot of pressure. They get pressure on them from their firms to even dabble in these kinds of stocks, And there are some money managers here that don't even want their firms to know they're here, to tell you the truth. I hate to say it, but that's the way it is. You have suitability problems and stuff. So, they don't, I always told the people to come here, go buy your own stocks and do what you want to do. So they don't want to recommend these stocks to their client. And then the whole business has changed because the whole business has gone to money management. That happened about 15 years ago. So you're gathering 50, they're asset gatherers, they gather 50, 100,000, and you turn your money over to some young buck, 28-year-old guy who was 4 years old when long-term capital collapsed, okay? And he sure as hell don't know anything about what's going on. And that, you have to be aware of that. So I always tell people, do your homework. You're not going to like every company here, but there's going to be a couple companies here, you look at and go, man, these guys make sense, and they're in the right place at the right time. They're making money. They got a good management team. That's really the key. Management. Because if you got a good management team, they may get knocked down once in a while, but they'll get back up and they'll keep working. And that's what happens to some of these companies.
Rich, one of the things I was realizing yesterday as I was just sitting in the chair listening to speaker after speaker is I was able to absorb a little bit more of the material because with the advent of the iPhone and YouTube, I consume a lot of information, but I'm also partly distracted as I consume it. So it was really good to just sit down, hear the CEO make the pitch, hear the presenters lay out their thesis for what they think is going to happen and why. And so that it's been really refreshing for me this week to experience that. But I like the story that you shared with me in a conversation last night where you were, like I am today, listening to a young CEO, Keith Neumeyer, share about a company, First Majestic Silver, before it blew up. Tell us that story.
I didn't even know who they were, and we were doing we did a show in Denver, and of course I've been probably through 1,000 presentations, so I'm sitting there, listening. I presented them to the crowd, and I'm just sitting there listening to them, I think at that time they had 4 silver mines. I love silver. And it's very difficult to find leveraged silver companies. That's why I started working with Avino years ago. And these guys, it's very hard to find a leveraged silver, pure leveraged silver company. And when he told me he had 4 mines in production, silver mines, I said, you got to buy this stock, and boy, it's been a big winner for us. Big winner. And but that's why you do these conferences. Sometimes you see, as you found out, you pick things out. Normally, I mean, just face it, we see all kind of data out there, but sometimes, and most important, I think one-on-one relationships are very important. And I think investing has gotten away from that. That's what this show is all about. We got 2 days of some of the best companies in the business to spend the time to come here and tell you their story, and you sit there and listen. And I got some diehard investors here, and that's what the show's about. That's why I started this thing. It's educational. You found out last night. Nobody does. We do about 10 things. There's not a conference in the world does this. There's not another conference like this in the world today, and still directed by the same guy. I mean, I'm 73, so I'm still alive to say that. But, we're there. I'm so bullish on the market right now because I've seen it all. I've seen everything, and we're here. But this is time. This is now to get aggressive.
So you're not concerned about a deflationary collapse and, buy on the other side of it?
No, we heard that story last night. It doesn't make any difference. Okay. The metals are the place to be.
Plus, some of these companies that I invest in, they're like at a couple of them I was looking $2 to $4 million enterprise value, $7 million cash in the bank, 8.5 million market cap. It's like, how much more low can they go?
They're not going. They're time to accumulate them. Tell you the truth. But you got to know the management teams. You got to really build you can call these guys and talk to them. That's what the show's all about. To see these guys, they're awful busy. We have some companies that aren't here because for the first time in their life, they're so damn busy they can't be here. Believe it or not, that's for 20 years that wasn't the case. That's a good thing. And I've been around long enough to understand that. The average layperson doesn't. And, the average layperson investor is, like brain dead on precious metal investing. I've fought that dilemma all my whole life, and it's not going to change. It's still there, but it spells opportunity for people that want to spend the time and do some homework. You're not going to like every company here, but you're going to see 2 or 3 that stand out, and you say that these guys make sense. That's what it's all about.
On that note, when friends ask me for a junior mining stock pick, and they don't follow the sector, I say, I'm not giving you a pick. I said, listen to my show. There's hundreds of episodes you can listen to learn about this. But first, convince yourself on the bullish thesis for whatever the company's exploring for or mining. If you're convinced of that, then head on over to an ETF because you don't have specific company risk, but you also won't have the huge upside of a little junior if they really strike it and outperform. So that's what I tell people. So I'm segueing into asking you this question. When you were a broker, would you just recommend a stock, or what was your educational process like to educate the client on what the little tiny gold or lithium stock you were putting them in?
Well, first of all, I had my own TV show here in Chicago for about 5 years. It was an investment show. Believe it or not, that goes back to right when CNBC started. And so you have to go out and talk to people that sort of think the same way you do. If you don't, you're not going to get anywhere with them, okay? And what's good about we control the Chicago market, and there's a lot of ethnic people that live here in the Chicago area. Eastern Bloc Europeans and everything, Asians, they understand precious metals. The average U.S. investor is, like I said, brain dead about the industry. No one understands the mining industry. I've been fighting this dilemma all my life. You got to understand, these are real companies. And the juniors, believe it or not, now they have some of the best geologists in the business because these guys, they know what they're doing and they survived. So they're out there building portfolios, acquiring properties, putting portfolios together. And we're there now. It's happened because the market's taking care of itself. You're going to see tons of mergers go on. It's happening all the time. I got the Northern Miner here with me, just sort of the Bible. I read it from point to point. But there's a lot of activity going on that we haven't seen for a long time. It's going to continue. It's now.
So we see the upside there, but for new mining investors, what are the key risks you want to highlight?
I want them to be diversified. You have to. You can't just buy one position. You got to buy multiple positions. You might want to buy a blue chip on the way too, or mix it with some juniors. I've done that before. If you got a managed money somewhere, keep it there. You got a broker you're happy with, stay with them. but stick this money aside and use it your position that you're going to run with, and everything that's been said here yesterday and today, you can bring up on our website. So you can look at the companies itself. We made a lot of effort in that to tape all this stuff because, like I say, this is a workshop. Same thing. You can do the same thing at home and look at this thing and spend the time. I mean, I don't know if you're going to spend 2 days, but what the heck,
Well, Rich, I've really enjoyed my time here, enjoyed meeting you. So thank you for asking me to participate. And I will link to the show, so the conference website in the show notes in this interview.
Glad to see you here.